So here in this video, there are two different distinct topics we will cover. First and foremost, there is a massive short squeeze coming for Tesla stock. And well, I don't even think we're ready to acknowledge what could happen in that kind of event, but I will do it here on this channel in this video. It's a little bit of speculation, yes, but we're going to look at valuations, what could be potentially an appropriate valuation for Tesla, just based on the Robotaxi event on August 8th and the other different things that are happening at Tesla. But on top of that, what a short squeeze could do to Tesla stock. And it gets pretty damn exciting. And the second topic we will cover here in this video is more in the short term, what to expect this week for Tesla stock and what the economic data looks like this week. Because yes, Tesla looks beautiful and by all metrics is going higher. But if the data does not play in our favor, if the Fed does not play in our favor, that could also have negative consequences for the markets and for Tesla stock. We should not forget that. So before we go ahead and dive straight into it, head first, hit that like button and subscribe to the channel and let me know what you think about this information down below in the comment section. It is also important to remember that I may make claims that I am positioned for that I believe in, but may not exactly be true. I am not a financial advisor, I am not a financial planner, and I am not a fortune teller. So come to your own conclusions. This is only my opinion. So let's start with the 6 central pillars or reasons why I believe Tesla stock will continue to go higher. Number 1 is underpositioning from hedge funds. Tesla just factually has been an underpositioned stock for a long time. At one point, 70% of firms on Wall Street or funds on Wall Street owned or had exposure to Tesla at one point. That was more so back in 2020 and 2021 when Tesla had positive momentum. That has fallen all the way down to about 35%. So now only about 35% of firms have exposure to Tesla via options or shares, yet Tesla is still the 11th largest company in the world. Now that this momentum is coming back into Tesla, and there's a long way to rally from 250 level where we are today to over 400 just to get back to new all-time highs, which if you consider other AI stocks or AI adjacent stocks are 30-40% higher than their 2021 all-time highs. There's a lot of room for Tesla to rally here, and hedge funds and institutions, they don't like to completely miss out. They might not go all in on Tesla, but they are going to start incrementally positioning back into Tesla stock. And that will be a source of buying pressure, and quite a large one at that. I've pointed this out in a couple of videos now, but if you look at the option activity over the past week, you have seen 390 different interesting trades in the options market worth $150 million in Tesla with a positive order value of 70%. So you can also see share positioning and option positioning that drives upside for stocks. Now, options can drive a lot of upside because one option, which these firms are typically buying hundreds or thousands of options at a time on Tesla to get that upside exposure. Again, depending on overall portfolio size and what they want to allocate to Tesla. But each option controls 100 shares. So for an example, a lot of the rally you've seen in NVIDIA has been option based. As you buy, let's say, a $300 call on Tesla. As Tesla goes to $300, what do market makers have to do? They have to buy 100 shares of Tesla for your option as Tesla starts to break into the money. And that causes more buying pressure and more buying pressure. And then typically what happens if Tesla goes to, let's say, 350, firms on Wall Street will go exercise their options, buy those 100 shares at $300, and boom, you get a lot of continued buying into Tesla via the options market and firms that just outright go ahead and buy Tesla stock. And I explained this in other videos as well, but Tesla's business was doing this for a long time, doing really well. And then it peaked out somewhere in 2022 and then started to decline. Well, technically in 2023, but certain metrics peaked out in 2022, like margins, started to decline. And now you're at the bottom again. And investors are saying things get better from here. And that helps fuel that repositioning back into Tesla with the expectation that things will get better from here. So that's number one. I touched on number two and number three as well. Number two is fundamentals improving. That's expected to happen. Estimates have come down for a long time. There's now room for those to potentially go higher again. And especially when it comes to the robotaxi event on August 8th, if we get the right guidance that we need for Tesla, I'll talk about that in just a moment, that expectations could really start to ramp up for Tesla, and that would obviously help Tesla's share price. Now, again, number three, the prospects of higher growth. A lot of that comes down to August 8th and the robotaxi event, but also rates. As we head into 2025, especially, I don't want to be political, but if T-Man gets elected, one of the first things he is going to do is get someone else in the Federal Reserve as the chair. He's going to get rid of Jerome Powell, and there's going to be a lot of rate cuts. Or if Powell wants to keep his job, they're going to start cutting rates by probably 50 basis points at every meeting or every other meeting at the bare minimum. And that's going to help out Tesla's demand a lot. That's going to help out Tesla's margins and boost profitability big time. So I think Wall Street may even be wrong. If we do see a lot of rate cuts, and Tesla is able to potentially even raise prices if the demand does pick up the way that I would expect it will, then you could see profitability completely explode over at Tesla. And buying Tesla today at 80 times multiples, let's call it 60 times next year's earnings, you may actually be buying Tesla at like 30 times next year's earnings. Kind of like what Nvidia did. They were trading at a higher valuation, and then they just continue to beat and raise. Next thing you know, the next year, Nvidia's trading at a lot cheaper. So you would have thought buying Nvidia at 60 times, 70 times multiple was expensive, but actually it was dirt cheap because their growth rate just picked up so quick. That is potentially what could happen to Tesla as well in 2025. I do think there's a lot of people that bought Teslas in 2019, 2020, 2021 that maybe want to get a new Tesla, right? But I think rates are so unaffordable that a lot of them can't, or they're waiting to get themselves a new vehicle, whether it's a Tesla or a different vehicle in general. I think there's a lot of that going on. Let me know down below in the comment section if you want a new vehicle, but you're just waiting for it to become more reasonable, cheaper to get that loan. I think actually when you start to get some material rates being cut, 1.5% cut to the federal funds rate, that's when I think you're going to see a lot of demand start to come in for all autos, but I think Tesla's obviously going to be a big beneficiary of that in and of itself. Now, number four I have here, retail getting back into Tesla. And you know, retail remains steadfast in Tesla for a long time. But at some points during this year in 2024, as the markets continued to go higher and big tech and AI, notably Nvidia, continued to go higher, a lot of retail sold Tesla and bought Nvidia. They bought other stocks. Now, how do I know this? Well, number one, it was reflected in Tesla's price action, especially when Tesla was in the 140s, 150s, 160s. There was a lot of selling pressure on Tesla, but I make YouTube videos on Tesla. I hear from a lot of retail investors that are invested in Tesla. You could just see based on the comment section of some of those older videos, people were very negative on Tesla. People were selling out, like literally saying in the comment section, they were selling out of Tesla, waiting for better price action to get in and taking that money to stocks like Nvidia. Now, you can also see this reflected in the StockTwits investor sentiment for Tesla as of recently. It has been very negative. Some days where Tesla was up 10% or 5% or 6% and continuing to go higher, retail was actually coming in with bearish sentiment scores, sometimes extremely bearish, between 20 and 35, which I mean, is a pretty good sign that retail's negative on Tesla. I don't think they're negative on Tesla. I think a lot of people are upset that they sold out and they missed the rally. Now, retail getting back into Tesla, which will inevitably happen again, that's going to spur more buying activity, more buying pressure for many months to come, just like under positioning from hedge funds. Number 5 on this list that I made is AI hype. And I think there is a certain aspect of Wall Street that is starting to try to find the real world use cases for AI. If you think about why big tech has been so successful in 2024, part of it is we don't know who's going to be successful with actually deploying AI. So it's a bit of a gamble right now to buy that stock or this stock or that other stock that's not a big tech name that is trying to do something with AI, because we don't know if they're going to be successful. So, I mean, there's just not a lot of stocks that Wall Street feels comfortable in owning in regards to AI, because we have no idea if they're actually going to be successful with AI. There's no, there's not really any companies that are bringing in dollars from AI. There's a lot of companies that are promising things, but a promise is not an investment strategy. So what has Wall Street been doing? They've been going with big tech names because they're like, Microsoft, Google, Apple. Those are going to be the stocks that succeed in AI no matter what. No matter if they fail in some areas, they will be successful in other areas. So I think there's a lot of that need or want to position into what will be successful AI stocks. But Wall Street doesn't have the confidence to just go invest in all AI stocks, right? Because a lot of them are not going to be successful. But big tech, the hyperscalers that are buying these, GPUs, they're going to create something and be successful with AI. It's a much safer bet right now to just buy the big tech stock. But that's why August 8th is very important for potential growth in the future and valuation overall, but also showing Wall Street, hey, Tesla can compete with other big tech stocks in regards to AI. Tesla will not fail. As Tesla shows that on August 8th, gives you a start for the robotaxi, I believe, in the first half of 2025. Wall Street's really going to start taking notice, and the chips will start going down on the table. People will start to make their bets on Tesla and start positioning Tesla as if they're going to be successful to some degree in AI. Now, there's going to be haters. There's going to be people that say robotaxis are never going to come, but there will be a decent group of Wall Street that starts to say, we should start paying attention to Tesla. Their AI may actually be something. And I think that creates a decent amount of AI hype in Tesla from August 8th until the end of this year and really beyond. And last but not least, you have the mother of all short squeezes. I think this could be the biggest dollar amount short squeeze we have seen in probably all of history. Yes, you had Volkswagen back in the day. You have had GME, you've had AMZ, you've had other stocks that have went up a lot. But I think on a dollar amount basis, this could be the biggest short squeeze of all time. That is because every $10 Tesla stock goes higher, short sellers lose about $1.1 billion in Tesla. And short sellers so far have not covered on short positions at all. In fact, they've lost almost $10 billion in this recent rally with Tesla. Now, first, before I speculate where I think Tesla stock can go during some kind of large short squeeze, I think it's important to also acknowledge where the actual, valuation could make sense for Tesla. And I like to keep this so simple it's stupid, because Wall Street's pretty simple and they're pretty stupid. So it seems like this is probably the best way to look at things for Tesla. Now, it's important to keep in mind Wall Street likes to price out about 12 months in ahead, 18 months, 24 months, 36 months sometimes, depending on where interest rates are and the overall risk premium in our markets. Without getting too complicated, it's fair to say markets are going to look ahead to the next 12 months and price that into their models. Now, especially as we get to August 8th, and after August 8th, I think it's going to be clear Tesla's growth is really going to start picking up in profitability the most, right? Because robotaxis should be high margin from the start. And I obviously, depending on the scale and scope of how the deployment goes, that will obviously play a big role. But we can simply look at next year's EPS estimates, which are $4.35. I think there could be a real boom in the second half of 2025 as rates start to be lowered. So I think that makes these estimates a lot more conservative as is. But I think you can simply sit here and say Tesla may deserve 100 times multiple. Today it's at about 83 or so. So that would only be a 17 multiple expansion from here. If you look at a stock like ARM, it's trading at almost 200 times earnings. Tesla at one point traded at 1,200 times earnings. So I don't think 100 times earnings multiple is that crazy at all, because then you start to look at 2026, what that EPS could be. And the estimates are likely to go higher there as well. I believe the estimate's currently about $7 per share. So that would mean the multiple is not nearly as high as what it is today. If you look at 251 divided by, let's say, 7. Yeah, so Tesla's multiple today for 2026 is only about 36 times. Let alone if the estimates continue to rise for EPS for 2026, then it's going to get even cheaper. So long story short, I think 100 times next year's earnings could make sense, about $435 per share. But if you add a short squeeze to that, because let's be honest, I don't think shorts are really going to start covering in mass until you're likely in the mid 300s. That's where you probably start to get a lot of shorts that start to get squeezed. I think Tesla could easily top $600, $700 per share with a short squeeze, bit of FOMO, bit of AI momentum. That could happen, pretty easily. Now, this is an interesting way to look at this as well. If you were sitting here saying Tesla may, during a short squeeze, potentially hit a $2 trillion market cap, I don't think that's unrealistic, especially during a short squeeze, right? Fundamentally, does that make sense right now? No. But during a short squeeze, could that make sense? Yes, I think that definitely could make sense. Again, Tesla's short interest at all-time highs, $26 billion currently sold short, almost 4% of the stock being sold short. That's crazy for a stock the size of Tesla. It is the most shorted stock on our market. So, I mean, just take that for what you will. But for Tesla to get to a $2 trillion market cap, that would almost be a 2.5x in share price from here. If you consider times that by 251 where Tesla's at now, that would put Tesla's stock at about $625 per share, 93 cents. At $625 per share, Tesla is at a $2 trillion market cap based on my math, which could be off. Fact check me down below in the comment section. And that's roughly where I was thinking a potential short squeeze could take Tesla to begin with. So that's a possibility. So my more fundamental end of the year price target for Tesla, being fully valued, of course, would be about $430 per share. A short squeeze price target could be in the 600s, around $625 per share, potentially a little bit higher than $2 trillion market cap. Wouldn't surprise me if Tesla could run to $650 during a full-blown short squeeze. So yeah, nonetheless, I think there's a lot more upside for Tesla from here. But again, let's give a brief overview of what to expect this week as far as economic data. We don't have anything on Monday of too importance. Consumer inflation expectations, expecting that at 3%. Last month it was at 3.2%. So expecting a downward move there. Monday, that comes out at about 11 o'clock in the morning. You do have Fed Jerome Powell that gives a speech at about 10 o'clock in the morning on Tuesday. Fed Bowman that speaks at 12:30. And then the inflation rate out of China as well Tuesday. Wednesday, you have another speech from Fed Jerome Powell at 10 o'clock in the morning. We'll see. I'm not really expecting too much considering we have the next Fed meeting July 31st, but the Fed could give us new details and it could be important. Thursday, you have your inflation numbers. So core inflation month over month expected is 0.2%. which you have seen about a 17% rise in oil in just the last month. So we'll see if that gets reflected in the data. Core year over year is expected at 3.4%. Headline inflation month over month is expected at 0.1%. So that's definitely reflecting the rise in oil, because last month you were at 0%. And inflation year over year is expected at 3.1%, a sharp fall from 3.3%. You will also get initial jobless claims, expecting about 240,000. Markets are watching that closely to see just how weak the labor market is and how fast it is weakening. That tends to be more of a leading indicator. And then you will get PPI month over month coming Friday. I think the CPI is obviously more important, but PPI could be important as well. Expecting 0.2% positive. Last month, you were negative 0.2%. And core PPI month over month is also expected at 0.2%. And last month was 0%. And then Michigan consumer sentiment. These will be very important numbers. Last month, they came in okay, but kind of bad for certain aspects, like current conditions came in pretty bad. Consumer expectations came in pretty bad. We're expecting things will get marginally better across the board, especially 5-year inflation expectations are expected to fall to 2.9%, and 1-year inflation expectations expected to stay at 3%. So definitely important data for this week. And Jerome Powell, I mean, is always a wild card. So we'll see what he says as well. Let me know what you think about all of this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a fantastic rest of your day, and I will see you in the next one.